So Max, George, if there's a guy out there, gal out there, he's like, I got $5,000. And by the way, let me go on the record. Pay off your debts, save some money, have an emergency fund, start traditional investing. I get it. But if they have an extra $5,000, right? Do you think they should put it into gold or Bitcoin digital gold? What do you think, Max?
Well, I mean, if they put it into gold, they're not going to be disappointed. They're not going to make a killing. Okay? You're not going to sit here and buy the stock that's going to give you 500% or whatever it is. But if you come back in 20 years, you know, and your money triples, or if worst case scenario, you know, even does more, I think you're going to be pretty satisfied. It's just safe.
Gotcha.
Gold hasn't disappointed anybody in the past 5,000 years. It's probably not going to disappoint anybody in the next 50 either.
Well said.
You know, so that's really what it is. So if you want to sleep at night safe,
Yeah.
that you have your gold and you know how to transact and cash it in, then, you know, that's cool.
So is it fair to say it's not for growth, it's not for major big upside, it's for safe, it's not going anywhere, it hasn't gone anywhere in 5,000 years?
They have the saying with gold, it's not a way to get rich, it's a way to stay rich.
Bingo.
It's a storage of wealth, like he said.
Yeah.
You know?
Gotcha. So you'd put it, so it all depends on what your strategy is. So you own gold as well?
Absolutely.
Gotcha. So you do gold and Bitcoin.
Yeah,
Bitcoin for the upside, but gold for the store of value.
I think it's about portfolio management.
Okay.
And so what makes people unsuccessful or successful in the realm of investing usually isn't what they buy and all that stuff.
Yeah.
It's usually their psychology, how disciplined they are, and how well they can manage their portfolio. And it's all about risk reward, right?
Yep.
So with my personal portfolio, what I always like to do is something that I call a 10-80-10 portfolio.
Okay.
So what does that mean?
Break down this 10-80-10.
Yeah, so the first 10% for me is what I consider insurance, and that would be physical gold. That's your insurance policy. The next 80%, I consider that an investment. So I define that as something that pays me to own it. So that would be a dividend-producing stock. That would be a rental property with positive cash flow. That's an example. That portion of my portfolio is paying me. And the reason I do that is because you never want to put yourself into a position of being a motivated seller. As a buyer, you want to take advantage of those people. And the only way that you're put into a position where you have to sell, usually unless you have some family emergency or something, is if that part of your portfolio isn't paying you. If it's paying you, then you don't care what the price is going to do. I'll give you an example. In 2012, that's when I got involved with real estate. Well, that was a good time, hindsight being 20/20, but at the time, I thought that real estate was going to continue to go down. Because if you guys remember back then, the GFC, real estate had gone down for 6 years in a row, and everyone thought that real estate would continue to go down forever. It's going to be like
Never
Japan
does.
or something like that, right? Everyone was telling me that was absolutely crazy. Well, it turned out to be, a good play back then. But my point is, I was buying the real estate because at the time I thought it was cheap, and it was paying me to own it. So even if the value of that real estate, let's say I bought a property for $100,000, even if the value went down to $75,000, who cares? Who cares? I'm not selling. It's just a paper loss. As long as I'm collecting that rent payment
and this
every
is in
single
your
month.
80%
Correct.
portion. Okay. And the last 10 would be what?
Speculative assets.
Okay, what would you define as that? Is that
Gold
crypto?
miners. That would be Bitcoin.
Okay.
That would be gold miners. Now keep in mind, I would a certain percentage of the net worth outside of the investment portfolio, I think should be there as a plan B. And I think that
Which
gold
would be what?
Look, if you have a central bank digital currency, I think that's the best example of a plan B to where you want to transact outside of the system.
Yeah.
Let's say you get canceled. I mean, you should be thinking about this. I mean, I hate
I'm
to
all
say
ears
it,
right now, yeah.
but with you and the topics that you guys discuss, I mean, and I've been canceled. I had my YouTube channel taken down from Twitter.
For what reason? Talking about the Fed?
No. This was back in 2021.
Oh, gotcha.
So I was talking
During
about some
the
stuff they didn't want.
situation that happened. Back
I was talking about some
That's why I stay in my
stuff
lane, George.
that they didn't want me to talk about, so they took that down. But the bottom line is you talk about some stuff that's very, very important, but people in high positions might think that it would be wise for you to go somewhere else or to censor you because you're
Well, let
spreading
me tell them,
misinformation,
guys, I'm a
disinformation.
nice guy. I say nice things. Sometimes the truth may hurt sometimes.
Yeah, but you could be
Nothing
unbanked. I mean,
can-
look at the truckers in Canada. Look how fast they got unbanked, right? For just
Trudeau.
That's right. So
Yeah.
you need to, especially in today's day and age, I think everyone needs to have purchasing power outside of the system. So I would consider that outside of that model portfolio that we were just discussing. And in that bucket, I definitely think you should have gold and Bitcoin.
Gotcha.
I think there's a lot of things that
This
would
is
give-
why Elon Musk can say the things he wants to say.
Because he can do his thing.
This is
But
why.
I do have
This
both.
is
I
why.
listen to both. Whoa. If you like that one, click right here to watch the full SOSCAST. And don't forget to subscribe to the channel.